Welcome back to Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment, and that's going to be Megan Brantley, Vice President of Research at LikeFolio. Welcome back to the show, Megan.
Thanks for having me, guys.
All right, so we're talking autos. GM seen a nice pop here over the last couple of weeks after announcing they're in that network with Tesla. But what kind of data are you guys seeing out of LikeFolio? We've got some CPI data that used car sales were higher, new car sales are relatively flat this past month. But do you guys have any positive data here? Because we're seeing the shares up about 15% so far this month.
Yeah, so whenever we look at GM, our data is really leaning into those new vehicle purchases from consumers who are going out and buying a new car. You think of brands like Chevy, like Buick, like Cadillac, and these are the ones that are garnering the most attention, at least from consumers, are the ones that consumers want to talk about. And when we look at those mentions, we see something that's a little bit troubling when it comes to consumer demand. So whenever you look at this on a quarterly basis and we try to gauge, okay, where are we sitting this quarter? Because that's still kind of the unknown, we see a bit of demand degradation. So that purchase intent momentum is dropping off. It's currently pacing about 32% lower on a year-over-year basis. And whenever we look at consumer mentions of buying a new vehicle, just across the board, whether they're talking about a new car, a new truck, a new SUV, we see those sliding as well. So we see some weakness, and we more often see consumers who are talking about, putting off that new car purchase, maybe waiting for interest rates to settle in. We see that being a big deterrent in consumer mentions. So this, I think that whenever you look at the demand perspective for GM, just currently where we sit near term, that's not a great picture. But whenever you think long term, I think one thing that investors and are really latching onto is that GM is leaning into this EV development, this EV sector. I think that the deal with Tesla and the adoption there is probably smart because it means GM doesn't have to build out its own infrastructure. It's tapping into, Tesla, the most robust charging infrastructure in North America, and it's really accelerating the ability for consumer to adopt these EVs. One less pain point and one less obstacles as consumers, consider buying an electric vehicle. But obviously, GM is still playing major catch up. Whenever we look at the EV market share and just overall consumer mind share, Tesla just dominates here. And it's so clear that Tesla is so far ahead of the game. So for us, we typically don't like to bet on companies that are, second and third tier when it comes to adoption or getting ahead of these consumer trends and cultural shifts, where really Tesla has led the way there. So I think a lot of the optimism is driven by this, leaning into EVs, but we just aren't seeing it make traction in our data yet. And I think a lot of this remains to be proven by GM.
Megan, a lot of people may have saw this move with Tesla and charging stations as a mea culpa by GM. But actually, if you look back in history, this is an old Jack Welch theory, which is make your back office someone else's front office, right? And if Tesla's doing it better, use them. So this deal is actually a really great idea for GM if Tesla has the infrastructure and frankly has done a better job. But my question to you, Megan, are we missing the boat here on GM? Because very slowly but surely, they're becoming a pretty major player in EVs. They've got, and it's not now, but it's coming. They've got 7 new products coming out in 2023. And very quietly, they sold 20,000 EVs in the first quarter. So, and oh, by the way, they get to finance all this with regular GM cars that they're selling. So this is a company making the big transition, and I think it's the Silverado EV is coming out. The Hummer pickup is already out. I've seen it on the road. I mean, this is a company making the transition. It's just taking a little longer than we thought, Megan.
Yeah, I think that we used to talk to you guys about, who is the company that's behind Tesla, because I think it's clear that, especially here in North America, Tesla is your clear leader, right? So who's coming in that second spot? And it used to be Ford. Now that's GM. We do see some acceleration there just in terms of the ranking that's kind of flopped. And I think that, GM is doing other smart things just on the back end. It's strengthening its supply chain when it comes to its batteries. It's building out more battery manufacturing plants. So I think it's making some long-term decisions that are very smart. And as you mentioned, this latching on to Tesla's charging stations was probably the smartest thing that GM could have done, especially considering the situation that they were in. Hindsight's 2020. I'm sure the company wishes they could have gone out and been the leader in this a couple of years ago. But it's kind of a moot point to think about, oh, what if? So this was a smart move from GM to make it the most convenient and the most effective, way for consumers to adopt and plug in, because we do see this shift of consumers adopting EVs as the future. We see this continuing. And so I think it's smart that GM is leaning in there. And we definitely do see this also when it comes to consumer happiness levels. We used to have Ford up higher. Now GM has a 5-point lead when it comes to consumer happiness over Ford. So this is one of those things where if you're looking for, who's the horse that is going to place, GM is coming in that second spot behind Tesla right now, at least from our data.
Yeah, that was kind of leads into my question, was the consumer happiness levels that are improving there. But I think one of the knocks against Elon Musk and Tesla right now is the fact that they've got limited models out there, and only 2 of them are selling, right? The Model Y and the Model 3. Is that the angle that GM can take where, hey, we're ramping up production fast, it's taking a little bit longer than they expected, Megan, but if they've got a wide array of offerings, will that help them in maybe the long term?
I think that it definitely will help. And I think especially here in North America, we see a lot of, when we look at the mentioned volume, a lot of consumers who are interested in some type of an EV for a larger vehicle. And that's an area where GM can really lean into. They specialize in these big, when you think about GM, the first vehicle that comes to my mind is like a Tahoe. You're offering a totally different value proposition to consumers versus, a Tesla that may be a smaller vehicle. But I think that another thing that GM is doing well that we haven't even talked about is this whole autonomous vehicle sector that they're continuing to develop. I think Ford scrapped its autonomous vehicle sector. GM is leaning into that with its Cruise version, which is already garnering revenue. This is a whole nother trend that we haven't even talked about in robo-taxis. It's also improving its partnerships with EV van fleets with retailers to assist with last mile delivery. So I think there are some other, pockets of potential growth that could be major drivers for GM in the future. Just whenever we look at GM right now, we don't see that translating in that consumer demand. We actually see some softness in that consumer demand. So, any pullbacks and things like that could be opportunities for long-term investors. Just from our perspective, whenever we put a score on this, our data looks soft just because that demand looks a bit weak right now.
Yeah, higher interest rates, and if there's any pullback in consumer spending, this auto sector better watch out, because I think it's going to dent them.
Well, everyone's been burned once before by this auto sector, so there's probably a little hesitancy to get back in. However, they are more healthy now than they've ever been, maybe because they're leaner.
Yeah.
Right? They don't have as many products as they have, and so you're right though.
Yeah, the stock was $67 just over a year ago, so we'll continue to watch that. Megan, thanks for the data.
Thanks, you guys.
All right, that's Megan Brantley, Vice President of Research at LikeFolio.